Hello, I'm Greg Bunnell. Welcome to Market Call tonight. Our guest is Jaime Carrasco, portfolio manager at Canaccord Genuity. Wants to take your calls and emails and tweets on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call. Lots of ground to cover. 1-855-326-6266. You can send an email to marketcall@bnnbloomberg.ca, or you can tweet us. Hello, I'm Greg Bunnell. Welcome to Market Call tonight. Our guest is Jaime Carrasco, portfolio manager at Canaccord Genuity. Wants to take your calls and emails and tweets on precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call. Lots of ground to cover. 1-855-326-6266. You can send an email to marketcall@bnnbloomberg.ca, or you can tweet us at Market Call. Welcome back to the program, Jaime. Always great to have you here.
Thank you for having me back.
So, where is the love for precious metals? Gold down around $1,200. What are we supposed to think of it all?
It's being dismissed. You know, it's funny. I read an interesting news last week about an archaeological dig happening in East Jerusalem, and they found a 2,000-year-old earring that somebody lost. And it dawned on me how sustainable gold is and how it's being able to keep its real value for almost 2,000 years. Finding that has value. All the archaeological facts of our historical value, but gold has a sustainability that in today's world I think is being dismissed and not properly there's no interest for it. And I think people are making a mistake, because especially when we see this currency storm that's definitely brewing. Now it's hitting Turkey. Pakistan seems to be going next. Before that it was Russia, Brazil, Argentina, you know, you name it, Venezuela. And I think it's important because we're contagion. This is starting to take shape, and Trump is pushing the strings. He's the puppeteer. He's the one that's pretty well saying, you know what, it's time that everybody goes on their own. And so because of that, I think in today's world and the uncertainty, the monetary issues, the economic issues, the geopolitical issues, I think gold and having some participation in gold is important, and people should consider it. And that's where I think one of the things that we have to focus on is asset allocation, proper portfolio structure, where the precious metals have a very important component, and people are dismissing what they do and how to have them. And so because of that, I continue to recommend that people hold at least 15%, because these are not normal times.
Is this a blip on the map? Because there's so many days when I see that kind of volatility, or there's the crisis in the Turkish lira, and you think, okay, let's look at gold, because this is when the money used to flow to gold, and you get a nice bounce, and gold is either flat or down. Well, everyone's so excited about crypto and so excited about marijuana, and no one seems to flock to gold.
Well, I think that there's something bigger happening here, because if you look at through history, look, over the last 2 years, since 2015 and 2015, I was reading a report that between real estate, stocks, and derivatives, they have added almost $103 trillion worth of value. Zero has entered the gold sector. Now, why is that important? Is because where's this money coming from? You know, this is a bubble of all of the printed money that has been created by the central banks. Now, the problem is that we are getting to a point where how do you unwind this mess? How do you let interest rates rise? And if we look at history, which I love history, you know, I think we're sitting exactly at a period like 1933, where the only way forward is to do a proper reset. And I think the Trump on Trump's card, and I love the pun, is whether he actually has the 8,900 tons that are supposed to be sitting in Fort Knox, because that would give him a lot of power in terms of saying, okay, if we're going to do some kind of a reset, you know, James Rickards keeps talking about the SDRs. Oddly enough, you know, it's funny, I mentioned to clients a while ago, when Turkey repatriated its gold, they took 600 tons from New York back out of the U.S. But I was really interested because 200 tons ended up in Basel, where the IMF is at. So to me, that was kind of weird, where if Erdogan is going on with all of this rhetoric, this political rhetoric, you know, we're walking away, why is gold ending up in Basel? Well, to me, if you look at the SDR, the currency storm, and James Rickard, I think that book he wrote in 2010, it's playing out to the T. Something has to give. And I think a monetary reset, some kind of a rebalancing, because realistically, the current monetary system with the US dollar as a currency reserve can't continue to work. That system is set up so that the US can continue to build and build debt until until you can't anymore. So it's funny, there's a chap called Triffin, he was an economist, and it's called Triffin's Dilemma, where he said that as currency systems start to break up, a currency reserve, the dominoes will start to flow from the weakest currency traveling to the strongest until the strongest fall. Well, that's exactly what happened in the 70s, and I think that's happening again. The strongest currency is the US dollar. So what I expect that's going to happen is that the US dollar is rising, but that's not good for the system. That's why the emerging markets are in trouble. But the ultimate currency is gold. So I think like the 70s, gold is going to reverse at some point here, and it's going to start to move with the dollar. Eventually, the dollar will unpeg, and then gold had its massive run in the 80s. Now, Canaccord...
We got to take a break and start taking some calls, but I know that the gold bugs, if they're listening, they're loving what you're having to say, and they're probably lighting up the phone lines. We're going to be back with Jaime Carrasco, portfolio manager at Canaccord Genuity, answering your questions about precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call. It's toll-free. 1-855-326-6266. Going to give you the number one more time if you're listening on the radio. It is 1-855-326-6266. Start taking some questions. We have an email from Jean or Jean. Pembina Pipeline. Your opinion, please.
I love this company. I think, when it comes to the pipelines, we just haven't built any. It's funny. So another news from last week was Jagmeet Singh, the new NDP leader. Mm-hmm. So we have this spat going on with the Saudis, right? And he was saying, well, we just won't buy any oil from the Saudis. And then I thought to myself, man, we're an oil-producing country. What are we doing buying oil from the Saudis? They're going to buy it from somewhere else. Well, how come we don't have pipelines going?
Where's the pipeline to take it from the west and move it to the east?
To Canada, so we don't have to buy it from somebody else. And so pipelines to me are massive monopolies. The sad thing for Canada, though, is that most of the pipelines flow north-south, which means that the Americans, if the fracking oil, there was another report that came out this week, how a lot of the fracking companies, because of the rise in interest rates, they're having problems financing. And eventually, I think that's a facade. It doesn't matter because they have access to our oil at very cheap prices. Pembina, I like it. I think it's one that is a steady piece of the portfolio. All of the pipelines, I think, we're not building any thanks to the Green Group. So they're massive monopolies, and they continue to generate cash flow. The other thing as well I think is important is Canada is going to get stuck in this currency storm at some point. We're starting to see it to some extent. So any company that can generate cash flow non-Canadian dollars, I think it's good, and that's one of the things I like about the pipelines.
Okay, we have a caller on the line, Paul in London. What's your question, Paul?
Oh, my question is on Gold Corp. Is this a good gold stock to own? And would you prefer gold over crypto, like Hive? Give me your analysis. Thank you.
All right, Gold Corp. Let's take a look and whether you're crazy about the new technologies.
First, Gold Corp. I like Gold Corp. Of the big ones, it's not one that I own. We have we tend to hang on. Give me 1 second. What is our current target on Gold Corp? We have it as a buy with a $23 target. I don't own it. I'd rather have the ones with the better leverage. One of the problems that I see is I compare Gold Corp and a company like Agnico, for example, to Microsoft versus IBM in the high-tech cycle. I'd rather get the better leverage that you're getting from Agnico. If you look at Gold Corp and Agnico's trading at a much higher value than when last time gold was down here, right? So it's actually appreciated much better. That's the one thing I don't like about Gold Corp. So I'd rather have others that'll give me better leverage. Having said that, it's a good company. It's a solid company. Now, as for the cryptos, I have a little bit of crypto. I have a little bit of Hive, but it's not a large percentage of my portfolio. I think the reason why I like the cryptos is because they're going to replace currency. One of the problems we have is money. Currency, not as real money, but as a derivative of money, a purchasing power mechanism. I think the cryptos will do a much better job. It also takes the power away from the banking system, which I think is one of the problems in the system.
Very interesting. We have Bob in Midland on the line. What's your question, Bob?
Boys, yes, I have a question. If you go back to January, and I was watching the show, and I was calling in about pipelines, the caution would be rising interest rates. I decided, you know what, I want to be ahead of the market here, bought into Inter Pipelines. The stock's gone nowhere, but I'm loving the dividend that it's paying me, and going forward, I'm feeling really good. That said, I'm a little bit nervous about REITs. You've got to be ahead of the markets, like you both agree. I'm feeling really good about going into REITs after their correction, knowing the 6-7 point dividend, thinking the stock price is safe, and then I'm ahead of the markets. But I won't lie, I'm a little bit more nervous about my REIT move than my move on pipelines. I'd like basically your comment on REITs.
REITs.
Let me answer this a little bit different, because I think let's take a look at the bigger picture, which is how to set up a portfolio, because I have REITs and I have pipelines within the portfolio. But within the asset allocation component, I have raised cash quite a bit. And on the income side of the dividend companies that I'm looking for as many of them that will generate cash flow from outside of Canada. Within that, the REITs, I agree, there's some interest rate exposure, but for now, I think they've actually managed quite well. I particularly like Dream Global because most of the cash flow is coming from outside of Canada. Same thing with the pipelines. So what I'm more concerned about is currency. What are the effects of currency within the portfolio? And there is where I'm trying to diversify it and try to benefit as much as possible from any decline in the Canadian currency. Having said that, on the REITs, I have been rotating, looking at some of the ones that have American exposure, for example. I'm also reviewing any that might have more rental properties. I'm looking at what's happening here in Toronto. People can't find or buy homes. Younger people are needing to rent, but we don't have any rental units. So I think REITs that have rentals are going to benefit. The other thing long term is inflation. The one offset of declining currencies is going to be inflation. So anything that's inflation driven, I think there's a benefit. So again, back to the answer, I'm not uncomfortable with REITs. I have reduced the content. I'm looking for good cash flow, but also set up the portfolio in a way to benefit from inflation, declining currency, and all the volatility that I think is coming because of the currency storm that I see brewing.
We'll take a quick break, and then we will return with Jaime Carrasco, portfolio manager at Canaccord Genuity, to answer your questions about precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call. It's toll-free, 1-855-326-6266. We have Anthony on the line from Halifax. What's your question, Anthony? Hello, Anthony. You're on the air. Are you still with us? Oh, it's Mark. Mark in Halifax is on the line. Mark's on the line from somewhere. Can you hear us, Mark?
Yes, Mark from Ottawa.
Mark from Ottawa. Okay, what do you have for us, Mark from Ottawa?
Eldorado Gold. Is there any hope for this company? Is this going to come back?
Well, I don't know. I don't own Eldorado. We have it as a whole right now. We actually just upgraded our target on it from $1.40 to $1.45. We think there's incremental improvements in their Kisladag project, but it's not one that I particularly own. Reason being is that I don't fully understand. I like plays with good reserves on the ground, low cost of production. I like the ones that are actually generating cash flow right now. Eldorado, we seem to like it. If you currently own it, I would hold on to it. I would definitely not be selling it. I think all of the companies have really taken quite a beating. If you started with 30% or whatever percentage it was, and it's down a bit, maybe add a little bit in this downturn. The thing is, I would be more moving into the ones that I think will have the better leverage on the rebound. At some point, I think we're going to get a rebound in the precious metals. And actually, when you look at the technicals, we just came out with a really good report on the precious metals. Canaccord thinks the fundamentals, the technicals, everything's behind them, and we should start moving soon. So, with this one, just be a little bit more patient. And I think patient is the word for most people holding on to these stocks right now.
Patience in the metals. We have an email from Kevin who wants to talk about the Killam apartment REIT. What's your opinion of it? It seems to have good growth and a fair dividend. Do you feel the management is strong? What are your thoughts on the balance sheet? I mean, it's a full rundown of Killam here. And I know you just said earlier, why not go apartment REITs? The young people need apartments.
Actually, this is one that I've been taking a look at it. We do have it on a hold, though. We find the, hang on, and the last report was issued. It's one that I took a look at, but because it is on hold, I'm holding back. And the reason being is, even though they had a strong quarters, the fundamental in its core Eastern and Ontario markets continue to strengthen. You know, I think they're of the feeling that it is well valued already. So it's we would need quite a bit more upside. So I think if interest rates do pull, I think, or go higher, it might be in a little bit of trouble. But again, you know, I think it has to be balanced with the fact that apartments are hard to come by and rentals are needed. Now, what is the yield on this? That's the only thing.
On my screen, I have
4.1.
4 point.
Yeah. So again, you're sitting with a 4.1 dividend yield. I think I'd rather go for something north of 6 or 7, which is attainable, and I think it's more sustainable. So with this one, I would definitely not be recommending it right now.
Okay. We have Brian in Grenville, Quebec, on the line. What's your question, Brian?
I'm calling about Slate Office REIT. My understanding is that they own second-tier buildings in Toronto, office buildings. And my question being, is business good? Thank you.
We believe it is. We actually like the positive leasing momentum. They're actually strong growth. We have a pretty good outlook for Slate. It's Toronto-based. I have not added much in Ontario. I'll be looking more at what's happening out west within the REITs. And again, I'm looking more at the REITs that are generating foreign cash flow right now, with a yield of about 9.7 right now.
I was going to ask you about that. With that distribution being that high, nearing 10%, first it makes your eyes wide, it gets your appetite whetted, and then you wonder, wait a minute. That's a fat yield.
No, as of August 7th, we have it with an 850 target, and we think it is sustainable, and definitely we have it as a buy. The other thing, I like the chart. If you look at this company, it's actually formed a really nice base. So I think it's taken the brunt of the of any possible hit, and I think it's a really good entry point. I will have to take a look at this again.
Yeah, definitely with a yield like that. So when we talk about the REIT, we've talked about apartment REITs, and we've talked about office REITs as well. Do you dabble at all with any of the retail landlords? With all the headlines about the fact that the retail landscape is changing, if people walk into a store, they simply just want to look at something before they go buy it online. Do you want to put your money to work there?
No, I don't have any money in that area. Again, within the REITs, I'm only sitting at about 10 to 15% of my equity income portfolio. So it's not a big component. I actually like the within Canada. I like the more demographic plays like what do they call themselves now? Sorry, it doesn't come to me. Used to be, sorry.
I'm terrible at guessing games. My wife makes me play guessing games all the time.
Yeah.
You know the actor the musician with the long hair? I'm like, oh, the musician with the long hair, because there's only one.
It'll come to me in the middle of the night. Leisure World,
yeah.
right?
Yeah.
Where it's more of a demographic play, and I think within those, I think there's more solid base in terms of growing forward. This one's one that I will have to take a further look, though, because I like the dividend, and I like anything once it gets above 6 to 7%. If it's sustainable, I think it's well worth participating in.
Okay, that was Slate Office REIT. We're going to take a short break, come back with some past picks. They're up next.
They bring up the 3-year charts.
It's time for the past picks. You heard it. Jaime wants the 3-year charts on these ones. We have some materials plays. We're not going back very far, though. Just to June 22nd of 2018 of this year. First one's Franco-Nevada.
You know, Franco-Nevada, I think, is one of those, it's more of a streamer, so it doesn't have much production exposure. It's the one that I have in the equity income portfolio because it's solid. It's good for, you know, my grandmother and my mom to give them that exposure or that diversification within the equity income portfolio. I think it's a great investment long term. It's not just precious metals. It's base metals. They bought into energy as well. So it's a well diversified income stream of resources. So I still hold it. I think it's solid. Actually, with this one, we rotated the equity income portfolio where it's sitting, and we actually sold a little bit this and Kirkland Lake, which were up quite nicely, and rotated into Detour and America Silver because they had come down quite a bit.
Detour is actually, that's a nice segue into the next one. Yeah. Detour is the next pick. Do you still like this one? You're waiting for?
No, I actually, this one's held very well. It took that big dive because they reported earnings and they pretty well said, look, we've done everything to lower the cost, but we need the price to move up higher now. And so it had a massive dive, but then it came out that Hank Paulson came out and said he's a big shareholder and he wants to restructure the company. So that's when it jumped up. It's nice to be in good company in terms of the ownership. I think it's a solid company. I think for the leverage that it offers, it's within the portfolio, and I'm going to continue holding on to it. And it was good that when we did the rebalancing within the special opportunities portfolio, we were able to buy more at a really nice price.
The final pick has had a rough go, even though we're only going back to June 22nd. America's Silver. What's happening with America's Silver?
Well, one of the problems right now is that there's some warrants coming due that need to get through. However, this company will have the best leverage of them all. Their cost of production is down to -2. Glencore buys all of their extra rock, which is lead and zinc. So that's why the cost is at -2. They've started a new mine called San Rafael that eventually is going to have their cost down to -7. So this is really the lowest cost silver producer in the world. Some people say that it's a base metal company, but I think it's because they haven't really touched the high grade rock. They've been mining the low grade where there's a lot of lead and zinc. What I like about this company, I've owned it for a long time. This company was 90 cents in 2015, so it's holding on quite well. Not many juniors are holding higher than they were in 2015 in this decline. So I would argue that these guys are doing extremely well. What I like about these guys, though, it's management. This is the Barrick team. When Barrick went out and bought that copper company, Darren Blasutti and these guys all moved over, and they've been running this company, and they've done an amazing job at getting production up, getting the cost of production down. Not many companies are delivering a negative cost of production, so I will continue to hold on to this and recommend it.
All right, so the picks were materials names. We had a royalty income stream. We had miners. If you like the metals, how do you play it? Some people think, well, I want to be in an ETF, or I just want to be in the actual metal, or do I want to be in a miner? Do I want to be in a streamer, a royalty streamer?
Good question. The one thing to be careful with an ETF is the composition of the ETF. I like the Century Select one because they own the shares. I think going forward, I don't want anything that has an esoteric exposure to it through futures or derivatives or anything like that, because you don't own the shares, right? And because of that, I think that if I manage a portfolio where we actually own shares and they're ours and they're there. With the ETF, I want to see the same thing, a manager that is actually owning the shares. And I think that's the important thing when choosing an ETF. It's the underlying access to the investment, okay?
Good advice. We'll be back after a short break. Our number 1-855-326-6266. Give us a call. We have Robert on the line from North York. What's your question, Robert?
Good evening, gentlemen. Thank you for taking my call. I want to ask about Alta Gas. It purchased a company called WGL, and once they went through all the administrative approvals for that transaction, the stock took a bump up. But lately, I've been seeing it come down. Its dividend now is a little more than 8.5%. So I'm wondering what the guest thinks of that.
Okay, let's take a look. AltaGas.
Actually, we have it as a whole, but I did add a little bit a while ago, about a month and a half ago. I've owned AltaGas for quite a quite a while, and I was being a little bit of a contrarian only because the yield was was above 8. It was almost 9% when I acquired a little bit just for cash flow. The reason being is that I want to start entering the Alberta economy again. I think oil in Canada is ridiculously cheap. This company will continue to, the dividend is sustainable. We don't have much of a problem with the dividend. We actually have it as a whole, but we're neutral on it. But I think energy in Alberta, as this issues start to arise, I think this will be a good entry point to participate in the economy over there.
Yeah, right now that yield at 8.7% on AltaGas.
Now, having said that, I'm not overweight or anything. Yeah. It's just a small position just to add to cash flow.
Right now, the street, including your shop, 5 buys, 7 holds, and 2 sells, and you are in the hold camp, correct? Mm-hmm. Right, Kathy in Belleville on the line. What's your question, Kathy?
Hi, thank you for taking my call. I hope you had a nice holiday.
Yeah, it was great.
That's good. You look well rested, by the way.
Yeah, it won't last.
But anyways, I would like to ask your guest opinion on Suncor. Lately, it really hasn't been doing anything except holding its own. Even though energy goes up, the stock really isn't doing well. When is the best time to buy Suncor? Would you buy it at this time? Thank you.
Right, thank you, Kathy.
No, I wouldn't. I'm not actually. When it comes to energy, again, I'm looking at foreign companies. One of the ones that I like is the Harvest Energy Leaders, which is an ETF. We own the shares of the top 15 companies in the world. I think energy should be added to in the environment that we're heading for, even though we've had a pullback in prices. I think geopolitically, energy is coming to the forefront. But again, in Canada, I think our prices are lower than anywhere else in the world, and I think that might hold because of pipelines. So Suncor is not one that I would be choosing, but I would definitely like, something like Vermilion, for example, where it's non-Canadian energy, but it's a Canadian company, and the dividend is.
Oh, so that's fitting with the theme too. We're trying to find the money is flowing from another jurisdiction, might be going through a TSX-listed company, but the money's coming from somewhere.
Correct,
else. Yeah.
And so the dividend's sustainable, and I'm going to get the pickup on the currency if anything bad happens in Canada. Again, back to currency. Think about gold in Turkey. Right, the Turks have a massive affinity for gold throughout history. Well, right now they're very concerned about their currency. They're buying gold, and I think currency issues all over the world are going to become more of a pressing issue for investors as they go forward as to where the cash was being generated.
All right, on the street, we have 22 buys, 7 holds, and 1 sell on Suncor. We have Anita in Markham on the line. What's your question, Anita?
Well, thank you for taking my call. My question is on Artis REIT. I would like to hear Jamie's opinion on this, please. Is the dividend sustainable? And I think they're getting rid of their U.S. companies. Could you please let me know what your opinion is on this company? Would you recommend this for a long-term hold? Thank you.
8.5% yield.
Actually, it's hard to recommend anything long-term in today's environment. I think we have to be a little bit more nimble. But yeah, actually, they are adding to their U.S. assets. They're not selling them. They're actually adding. And I've owned REIT Artis in the past because of their Alberta assets, but I did sell it when I reduced energy back when, whenever oil was in the $100 range. I have been looking at this, and I've added a little bit only because of the dividend, but I like the fact that they have divested themselves out of Alberta and not adding it into the U.S. I'm not 100% positive of the U.S., but I think the U.S. dollar versus the Canadian dollar, again, the currency is much. I'd rather be generating some cash flow from the U.S., so I like what they're doing internally. We do have it as a buy with a $14 target, but we just, I believe, reduced our target. But still, we do like it. No, we upgraded it from hold, actually.
Oh, so it was an upgrade.
It was an upgrade.
Yeah,
upgrading to buy.
Upgraded up to buy, $14 price target. Mm-hmm. All right, that was Artis REIT. We're going to be back with Jaime Carrasco, portfolio manager at Canaccord Genuity, to answer your questions about precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call, toll free, 1-855-326-6266. We have Nazar in Scarborough on the line. What's your question, Nazar?
Oh, hi, gentlemen. Hi, me. Yamana Gold was trading above $4 6 months back and is now languishing below $3. What are its prospects in light of the escalating U.S. dollar and the price of gold now around $1,200? How would you rate it against Alamos Gold? Thanks for taking my call.
Thanks, Nazar. Languishing. I love languishing as a descriptive word for a stock. It languishes.
It's on sale, actually. That's how I would describe it. Yamana, we have it with a 550 target. Actually, I took a really good look at Yamana when I repositioned the portfolio a couple of months ago. And it was one that I almost bought, but instead I went with a vanadium play with Largo Resources. I like vanadium, and it's the only vanadium piece that I have in the special opportunities portfolio. But I like Yamana. I think it has some good upside. It's got good low cost of production, good reserves on the ground. Geopolitically, the properties are well located. Long term, I used to have a bit of a problem with management, but I like Daniel Racine as CEO now. He's actually a really good mine manager. So it's one that I'm quite positive, but I don't own it right now. Versus Alamos Gold, I don't have an opinion because I'm not sure about Alamos. I haven't looked at that one. But Yamana, I think it's a good company. I think below $4 is a really good entry point. And it is the same thing with all of them. Like right now, I think that if you own it, it's not a bad time to average down. One of the price targets with one of the technical guys that I've followed for years, he said that we could get as low as 1150 here before we have a really good entry point. We, again, Canaccord thinks that we are right now at a really sweet spot. I like the sector. I think nobody owns it. I think it's the least owned sector in the world. So, you know, investor apathy right now towards it. Again, it's funny because I'm always reminiscent of, you know, when I started in the business back in 1998, 99, everybody was dissing Warren Buffett because he was value. Everybody wanted to get into growth. Nortel, right? I think it's the same thing with regards to this sector, but I think this sector is going to be more important because we are unleashing quite a bit of inflation. Stagflation keeps building, the inflationary numbers, and now we have growth is going to continue. You know, look at the U.S., the 4.2 growth Q2. Well, that was dependent on, first of all, the taxes, which was a one-off, and the decline of the dollar. The dollar isn't helping that, the rise that we've had of late. So going forward, I think global economy will also start to stagnate. So stagflation is definitely building within the system. That's why I think the precious metals are important, and good quality companies are going to deliver quite a lot of return for people and a good hedge or insurance against financial calamity, which, you know, could be hitting us at some point.
Dave in Toronto, our young investor. What do you got for us?
My question is about Teck Resources. I bought this at $32 and now it's $31. And my intention was because it's a low PE ratio, it's a large company, and I was hoping that like this is one of the stocks where you kind of put away and don't think about it for 3 or 4 years and then wake up and then it's like $65 or $70. Do you share that opinion? What do you think of the stock? Do you have it in your portfolio? And also, it seems like you know a lot about currency. I want to exchange a lot of Canadian dollars to U.S. dollars. When do you think the right time is to do that? And thank you.
All right, wants to go to sleep, wake up rich in a couple of years, and also exchange some loonies for greenbacks.
Teck Resources. You know what? This is one that I always look at, and I haven't participated in because, you know, at some point I think the whole I disassociate between the base metals and the precious metals. I see them more as currency, as money. On the base metals, though, you know, we've had this massive spike in copper, which now it's falling back. We seem to be heading into a bit of a disinflationary environment. And because of that, I think Teck would be a really good one to buy when copper gets to a bottom. But again, copper, if you can bring up the chart, has been pulling back. I think it's below 250 right now. I don't have it. I haven't looked at it in the last couple of weeks, but you know, if copper starts to rebound, I think Teck is a solid company. So what are we?
Copper 269.
269. So it definitely, if it breaks down here and it goes below 250, 250, 225, I think by then we'll have a good entry point into tech, and so I would mirror both of those. So would I be buying it right now to go to sleep? No, because again, we don't know what's going to happen in the next 2 to 3 years, but I would definitely be monitoring. There was one more question that he asked.
Yeah, right now the Canadian dollar is at 76.62 against the greenback. Dave wants to buy some American money. He wonders if this is the time.
You know, it's funny. I look at the U.S. dollar versus the Canadian dollar. I think what's happening right now with the currencies and the fact that I think Canada, you know, it's no longer NAFTA, it's AFTA. The Mexicans and even the new Mexican president isn't negotiating with Canada, so it's as though everybody's separating. I don't think that's good for the currency. So picking up some U.S. dollars would not be a bad thing. Again, having a source of U.S. income would be good, and so, you know. Again, we're speculating with currencies, and currencies are getting more and more volatile, but it wouldn't be a bad strategy to convert some Canadian dollars to U.S.
We'll be back with Jaime Carrasco, portfolio manager at Canaccord Genuity, answering your questions about precious metals, pipelines, utilities, REITs, and dividend-paying stocks. So give us a call, toll-free, 1-855-326-6266. We have a pair of Stevens waiting on the line. We're going to go to Calgary first for the Stephen there. What's your question for us, Stephen from Calgary?
Yeah, hi. I'm interested in PXT, and I'm hearing mixed messages with regards to it. Like, apparently the earnings are excellent, and so some people are saying it's a buy, and while other people are saying they want to get out of Colombia and they're not interested, they want to be more in other areas of oil. So I'd like to get your opinion on it.
I don't follow, I don't own Parex. We do follow it. We have it with a buy target of $31. The one problem with this company was that exploration disappointed. So the results were soft, but exploration disappointed. The one thing with a lot of the oil companies is they have to continue to increase their reserves. So just by reading that, I would suggest, you know, being a little bit more cautious with it to see if it could be a one-off on the exploration, but you know, and maybe that comes back on stream. But I would be cautious just because of that on this. Again, we have it as a buy target with a $31 target. Okay. But I don't own it.
Don't own it. We now go to Vancouver for our second Stephen of the block. What's your question, Stephen?
It is on BCE. And Mr. Carrasco, Senor Carrasco, may I say buenos dias and muy bien. Welcome back, sir. And my question, and I'm a senior investor. May I ask your opinion on a BCE concerning it? Concerning the aspect of, is it a good defense against inflation, as coming from the interest rates increases, and also how safe am I against further price increase in inflation? And if I may get your opinion, sir, if it could be a good play on the for senior investors like me.
Okay, BCE.
Okay.
5.6% yield, but the stock's not had a great year.
No, actually, I sold BCE when I raised cash about 2 quarters ago in the equity income portfolio when I went more conservative. BCE was in there because of the dividend, but I'm happy that I took it out. Reason that I took it out is because, again, I'm looking to diversify the cash flow to come from outside of Canada. I think the problem with BCE is so Canadian-centric. I like the business model because they've been moving over to data management more than anything. And I think eventually that'll pay out, but I'd rather wait on it. Because of that, you also have to think that this is more of a high-tech company as they move over to data processing and all the data rooms and that. Again, I sold it because I'd rather generate cash flow from elsewhere. And we have it as a hold, actually, on our research. I don't think I would be looking at it for a while again, and I would be looking at other companies that, again, are going to generate cash flow from outside of Canada.
As a reminder to the viewers at home, BCE, ultimately the parent company of us here at BNN Bloomberg through the Bell Media division. We got Danny and Pickering on the line. What's your question, Danny?
Your opinion, please, on Silvercrest Metal.
Thank you.
Silvercrest. Let's take a look.
Silvercrest is one that we follow actually, and we have it with a we have it as a speculative buy. Give me 1 second. I want to bring it up because this is one that I was looking. I haven't made any changes lately to the portfolio, but it's one that I took a good look because I really like silver. I think silver to me will have a better upside than gold because it's poor man's gold. Also, what's interesting is that a lot of people are noticing silver prices haven't gone anywhere, but silver production, manufacturing for green energy has gone from 35% of manufacturing demand to 55%. I think that'll continue to grow going forward. What I like about them is that they definitely seem to have a high grade in this Bobby Norte project that they have in Mexico. They're definitely finding some very high grades, almost 568 grams per ton, which caught my eye, and that's why I started looking at it. So I actually would say that this company has some upside in terms of silver. Now, silver, again, it's within the special opportunities portfolio. I have both silver and gold producers. And the only issue that I have right now with Silvercrest or any of the silver companies is I'm taking a better look at the politics in Mexico. How do they change? We have that new government come in, which is a completely off the beaten path political. He's a bit of a demagogue, a little left-leaning. So I want to know if he's going to take the Chavez route. Now, I don't think it's going to affect the silver properties too much, but it'll definitely affect the oil. And there's a lot of politics with regards to Pemex and the changes that the other government had done. But again, it's worth keeping an eye on. Silvercrest, we have a 450 target, but we do call it a speculative buy, and hopefully these intersects continue to develop going forward.
Interesting name. We're going to be back after this short break. Top picks coming up next. It is time now for top picks. First one on the list is I Am Gold. What do you like about this name?
You know what? It's one that I've looked at for quite a while. They bought me out of Trelawney back in 2014, and what I wanted to do was showcase our research. This is their top pick. We have it with a $10.50 target. When I looked at this company, they're right. They have quite a number of projects. It's undervalued in relation to the other ones. It hasn't really moved. So I think that it has very good leverage going forward. I think value will come in as the price starts to move. They're actually well managed company, and money, I think at some point will start moving in. So in relation to, again, I'm trying to rotate out of the ones that have gone up quite nicely and acquire the ones that haven't moved yet. And I think this is one that fits that bill quite well. Good management, low cost of production, diversified assets, good reserves on the ground, and in geopolitically safe areas, which I think are the criteria that I look at to protect myself.
Right, very interesting.
One more thing that's important about the Canadian producers. All of the good quality producers with cash flow have been outperforming. They've actually held much better than the last time gold was down here. I don't think people are noticing that there is money going in. One of the benefits is the currency because they produce in Canadian dollars and they're selling it out in US. So I think there's some sustainability here, and people aren't noticing that yet, that there is money coming in. Agnico, even though it had just had a pullback, it's sitting at $50. Last time we were down here in the gold price, we were down below 30, so it got down to 22. So again, these companies are holding quite well.
Barkerville Gold.
Barkerville is on the other side of that spectrum. I think it offers, we have it actually with a $1.25 target. I have owned Barkerville for quite a long time. I like this project. Here's a different bit of an animal. They've already started production. Small production just started up, and the mine should pick up, so cash flow should start to generate. But more importantly, they have this Caribou Gold project where they're finding some really good grades, and it seems to have quite a lot of continuity. So I like that. I think one of the reasons why I like Barkerville, I think Osisko already has a really good position. I believe it's over 20%. I think at some point this company gets taken out. Within this spectrum, I do expect that at some point the bigger companies are going to start taking out the little guys because they need to replace reserves. So the companies that can bring in reserves are going to be in play, and that's why I hold on to those little guys, even though they've come down quite a bit. Actually, with Barkerville, as we rebalanced the portfolio, we ended up buying a little bit more. Like it was a little bit higher than where it's trading now, but again, it was good to add to at these cheap prices.
Final one on the list. We've got a minute to run it down for the audience. Dream Global REIT.
This is my favorite REIT right now because most of the cash flow is coming in from Europe. This is within the equity income portfolio, the one I manage for older people that need to generate cash flow. I think what's important, it's funny because when I reorganized the portfolio, I actually increased cash, started buying some convertibles. So right now, even though I'm higher in cash, I am generating more cash flow than I was before, because of the shift, and it's actually benefited because we did that about 2 quarters ago, and the portfolios are holding steady in terms of value. We're getting the cash flow, but we're seeing very little volatility, and the volatility that's starting to arise right now, and I can sit in cash. That portfolio is pretty well has enough cash in it to supply cash flow for at least 2 years for people that require cash flow. So and Dream Global within that, I think going forward, will continue to do well because of that. Actually, what's interesting about Dream Global, if you look at the chart.
If it's got to be interesting in 5 seconds.
In 5 seconds, the chart is nicely balanced and it looks as though it's starting to move higher. So money should be coming in.
All right. You've met the challenge. Always a pleasure having you here, Ivan.
Thanks for having me.
Look forward to the next time. As always, at home, please consult a qualified financial advisor before you make any big investment decisions. And, of course, make sure you watch tomorrow.